This is Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, a quarter of Australian adults don't have a regular savings plan. 3 in 5 save less than 10% of their salary, and on average $350,000 in savings would make Australians happy. And also, what are the latest hotspots that you could be investing in 2018? Well, joining me on the show tonight is Effie Zahos, editor of Money Magazine, and Charles Tarbey, chairman and owner of Century 21 Australasia. Good to see you as always, and we'll bring your magazine cover up as well, talking about the hotspots. So how do you find the hotspot? What's the secret sauce?
Oh, I don't think I've personally got the secret sauce. But what I do have, I guess, is consistency with this. We've been doing this for 7 years now, the top 50 shares and property hotspots. Although with the share market and its actions over the last couple of weeks, that would be a tough one. We actually go to hotspotting to work on country.
Terry Ryder?
Terry Ryder. So you'd know Terry. He's been doing it for 7 years, and we always go back to what his picks were. So there's
just to double check on him.
Just to double check, make sure he's on his game. That's what our readers want. And basically, we tap into his data. So this takes him many months to put together. And there's a criteria around it. So he works on infrastructure, existing and new ones that are coming, affordability, what developments are happening, jobs that are occurring in that area, puts all that together, and that equals growth for hotspotting. And then comes up with the top 50, and then when we narrow it down to 5 as your top picks. So yeah, it's been good. I think some of the suburbs have done well, but like everything, I think the 8 capital cities last year delivered a 5-speed economy. It is, and I think it's finally getting into a lot of new buyers, that the property market is not just one market. It's like every other asset class. I mean, you invest in, say, a balanced fund. It's made up of several different components, and exactly like the market is.
Now, Charles, just talking about all those different things, infrastructure, new roads, hospitals, schools, there's no way the average person can do that, is there?
It's very difficult, and it changes too. By the time often hotspots are found and presented, they're no longer hotspots, because all that information has occurred in most cases, and all the buying and all the activity has occurred. And so a lot of people start gravitating to those spots sometimes a little bit too late. And they miss the opportunity. And I think parts of what Effie's talking about, if you could, as an individual out there, grab most of those things, because you can see them with roads, you can see them with schools and hospitals, that's giving you a great indication. But in established areas, it gets really hard to pick the hotspots, because all of the infrastructure is already there. So you've got to find another way. And mostly, from my experience, it's been based on how many signs you see in the field. So if you see a lot of for sale signs in the field, there's an area that you probably negotiate on. And if you see fewer for sale signs, you know that it's moved to a certain point and it might be harder to get into.
Pretty tight. So, Effie, take us through the New South Wales and the Queensland ones. Yeah,
so these are just some of the picks that are in there. The Queensland market is definitely going to be a state of mixed fortunes for sure. I mean, the Brisbane market hasn't moved too much. Our picks there, Alcester, Petrie and Springfield. Interesting to note, if you are looking at Brisbane prices haven't moved too much, expecting maybe to see a lot more improvement. That's only 11 kilometres from the, 11 minutes to, from the city there. And you're looking at a medium half price, of still under $500,000. We also include 3-year forecasts so people can get an idea, and yields. The yields, unsurprisingly, in Queensland, around 4 for those 3.
And probably New South Wales, which we'll pull up now, that's probably a bit of a different picture.
Yes, New South Wales, definitely. I mean, we had some great growth, single digits. Hotspotting is predicting probably no growth. In some cases could be, negative, depending on what area. But look, the thing with Sydney, let's not forget what got Sydney there in the first place. The infrastructure's still there. We still have population growth, and we still have a strong economy, a state economy. So it's a case of the underlying is there. Will we see double digits? Probably not. We have oversupply, obviously in Parramatta and Olympic Park, but these ones we've picked out out of the hotspotting ones as ones with strong potential, and you'll notice they're all around or outside Newcastle, so it's that ripple effect that's coming through.
So again, reasonably affordable as well compared to other kind of inner city.
Toronto, near Lake Macquarie, 28Ks from Newcastle, yeah, 428K.
Yeah. Now, Charles, can you pick up a magazine, pick a hotspot, and you're guaranteed every purchase in that suburb's going to be a winner?
Chris, the real estate agents are asked all the time, how's the real estate market? And we really don't know, because how many times have you seen where agents post on Facebook, which I find quite embarrassing, how much more they got over the reserve price? I see that as a negative thing, because it's obvious that the agents weren't up to speed with their marketplace, so therefore they're predicting a certain figure and it goes a lot higher, and that's why the underquoting or laws have kicked in. I do find that certain marketplaces have had strange movement. You talked about Brisbane. That's really a strange marketplace because there is an oversupply kicking in, certainly in the apartment areas, but it only had a 25% gain in the last 5 years in capital growth, whereas Sydney had 75% in the same time. So parts of Brisbane can become really good hotspots, but you've got to get there before they become hotspots.
And can I just add, the Gold Coast is one we get a lot of people asking about because of the Commonwealth Games, but I think you're right what you said, that price movement probably has already happened.
Yes.
Yeah.
And it's very noticeable that after events such as the Olympics and so on, that the prices do change downward, and that's been proven in many capital cities that have held the Olympics around the world.
So pay to get the research, get it quickly and move pretty quickly with that as well. Now, we haven't got too much time, so we'll run through Victoria and some of the other states quickly, yeah?
Victoria, outer regions, again, for affordability. Ballarat East is one, $290,000 there for an actual house. When you're looking at South Australia has had a great situation with its state economy, which is good, in the sense that jobless rate now is the lowest it's been for 5 years. Mitchell Park, I mean, Port Augusta, we're seeing, you know, millions, billions going into energy projects there, and yet you can still buy a place for $160,000. Forecast is about 25% there over 3 years. And finally, Perth. Yep. Rotten 4 years. Suspecting this year may be Perth's year, and there's some properties there to have a look at.
So we'll try and get the South Australia and Perth just up on the screen there. So, yeah, just certainly come out with that.
We've been out of the game on this because we've been talking as Perth as our area towards the end of last year. We see Perth as the place because of the many things that have happened there so quickly.
Yeah, so certainly if people are struggling with affordability, there's still plenty of hotspots
It's a great start. It's a great start to your research. Have a look at them. Research further, of course, obviously, and take it from there.
Sounds good. And obviously buy your magazine.
You can.
Exactly.
Go to the library too if you can't.
Charles, let's jump into your numbers. We're now getting into February, so they're more leading now. What are the clearance rates?
We're getting more auctions in there. The Sydney auctions were 517 and Melbourne 621. That's still well below what they normally have, but 67.7% was the clearance rate. And at the same time, this time last year was exactly the same on a national basis. But Sydney and Melbourne actually didn't perform as well as this time last year. So 68.7% was the clearance rate for Sydney, 72.5% for Melbourne was the clearance rate. The only capital cities that performed better this last week than this time last year were Adelaide and Perth. And again, those are the two markets that we've been talking about very heavily.
OK. And what about homes advertised for sale?
Yeah, it's great. We had a fairly big spike going, and it's still moving upwards. 1.23% increase in stock over this time last week, and last week was over 5% increase of the week before. I think you called the stats out for me last week, didn't you?
I did.
Well,
I didn't
can you
say
tell me what
well.
it was? I can't remember.
I didn't say them as well as you, Charles.
Okay. No, 1.23% increase. It's great.
And moving on to the rental price. Yeah,
now, we expected a big increase over the festive season, Christmas and January, a lot of people moving around that. I expected a change in the downward position, but it was up 2.52%. And when I look at it over that period of time, over the last 24 months, rents have been pretty solid. They haven't moved dramatically, but Hobart and Perth experienced 4% and 3% growth in this last week because of the activities that are going on. But I'm going to watch that very closely over the next few weeks, and I think it'll be a downward trend.
Wonderful. And then finally, the vacancy rates.
They've been very steady. Sydney, for a change, has had a big increase. It was sitting in the ones and very early twos. Never got to the twos much, but it was 2.48% was the vacancy rate for Sydney last week. Melbourne, fantastic, 1.1, and Perth at 7.64%. I'm really happy about Perth sitting in those sevens for quite a few weeks now, whereas well over 10. So 3.74% is the average for those three capital cities, and they're a good indicator to watch, the vacancy rates, really good indicator to watch.
Wonderful. Well, it's good to see those figures coming through. Now, Effie, apparently a quarter of Australian adults don't have a regular savings plan, and 3 in 5 save less than 10%. Maybe that's why they can't afford property. So, how come?
Look, saving, and if you have a look at also some stats, so that was some research that came out from Money and ING, and we took that and then took it one step further, and I'll talk about that a little later, but the stats from the ABS also show that our savings ratio now is about, what, 3.2%, which means for every $100 after tax, we're only saving $3.20, and that used to be 3 times that only 3 years ago. So clearly there is a problem why we can't save.
And I assume they're not giving it all to charity or anything like that.
I don't think so. I don't think so at all. But the case is, Chris, we're looking at still wage growth is low, cost of living is extremely high, and people's debt, we're at a ridiculous level of personal debt. So it's a case of, is there any money left over to save? It's a combination of both. And that's why we then thought, you know what, we need to get moving on saving. So we've come up, the Money Magazine's come up with the 8-Week Saver campaign, 8weeksaver.com.au, to really give people that little push. So it's a campaign. Each week you get one thing to do. Very simple. Just do that one thing. You've got 7 days to do it, and then you move on to the next one. And the idea is that you should have a cash little stash put away.
And we'll try and get it up on the screen. So 8WK and then saver.com.au.
Correct, yeah.
Obviously lots of tips and stuff
Yep.
like that. Charles, I know you're coughing and struggling.
Yes, I am, yeah.
OK, I won't jump to you. What can young and old people do with trying to change what they're supposed to be doing, apart from go on this programme?
Yeah, it was interesting. We were talking to economist Shane Oliver, and he had this great comment whereby, you know what, interest is what you earn. It's compensation for giving up buying something now. So it's the case of this mind over money, and we spoke to a lot of psychologists and psychiatrists who delve in financial matters as to why don't we save. And it comes down to something very simple. There is pain in having to kind of give up and save. People want something instantly, and it's like, well, no, I can't wait, I want it now. So it's setting up these mental buckets in our own head as to, you know, why is it sometimes if I'm at, say, a $2 shop, I'll deliberate buying something very cheap, yet I'll go out and buy a car in a moment's notice, not even compare or save. Or the same with our home loans, and, you know, can we get better deals? So,
and I find a similar thing when people buy investment property. When they buy their homes, they go and see 100 homes because they're going to live in it, but then they'll go and fly interstate and they'll just go and buy something and they'll trust whatever they see.
Yeah, it's exactly that. And our mind is pre-positioned or programmed into cases like that. So it's overcoming those barriers as well, because, you know, money is not just all about cents and dollars, or more dollars and cents, I hope. It is also over the mind. So we've got tips about how people can overcome the mental barriers to saving. But look, you know what? It is pretty simple. You either got to earn more or spend less. And I'll tell you what, you know, earning more is a lot harder than spending less. So, you know, the simple thing is do a budget. Sounds boring, but
if
get
there's
to
a
it.
will, there's a way.
Yeah.
And I think we'll put this in record as this is the first show that Charles Tarbey has run out of talk.
I'm choking over the comments. I'm choking over the comments.
I know, unfortunately.
I'm crying too.
Talking too much at conferences. Anyway, coming up, the real cost of sending your kids to school and what's the best way to save for school fees. We'll be back soon.
You're watching Sky News Real Estate. Smart investing.